Ladies and gentlemen, good day and welcome to the Kellton Tech Solutions Limited Q3 and 9M FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. I would like to thank you all for participating in today's company's earnings call for the third quarter of the financial year 2026. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which should cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and a financial quarter under review. Now I would like to introduce you to the management participating with us today. We have with us Mr. Niranjan Chintam, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Mr. Srinivas Potluri, Chief Executive Officer, US. I would now like to hand the conference over to Mr. Niranjan Chintam. Thank you, and over to you, sir. Mr. Niranjan, can you hear us?
I'm sorry, I was muted and speaking. Thank you, Mike. Good evening, good afternoon, and good morning to all of you for joining the Q3 earnings call. I want to start off with the financial highlights, and then we'll talk about operational highlights as well as customer wins, and followed by, questions and answers right behind that. So I want to quickly talk about our financial results. I know we have published this, but I'll go over it just to give you a quick summary of it. So I will not bore you with all the details, but I'll go with the numbers that we have. The revenue we have achieved 308 crores compared to 300 crores of last quarter, which is about 2.7% growth over last quarter. And EBITDA was about 39.7 crores versus 37.8 for the last quarter. So we have a 5% growth there. When it comes to the PAT, we are at 25.5 crores versus 24 crores for the last quarter, again a 5.8% growth. The EBITDA was around 12.9% and the PAT margin is 8.3%. Whereas in the last quarter for PAT was 8%, so they continuously show improvement when it comes to revenue as well as the bottom line. Going back to the 9 months one, the previous 9 months, last 9 months was 905 crores versus 812 crores the last year. And when it comes to EBITDA, we are at 113 crores versus 99.5 crores. And EBITDA margin was 12.5% versus 12.2% for the previous 9 months. Again, the PAT margin is at 8% for the whole 9 months up to now, and the previous year it was 7.4%. The diluted EPS is 1.4 rupees versus 1.3 rupees for the 9 months. When it comes to the quarter, the EPS stood at 50 paisa versus 40 paisa for the last quarter. So there is an improvement there too. With that, I want to hand over to Karanjit to talk about operational highlights and the customer wins. Karanjit, over to you.
Sure. Okay. So, good evening, everyone, and thank you, Niranjan. So I will cover both the new customer wins as well as the operational highlights. So let me first start with the client wins. So I think I have a long list. We have about 11 clients, but I'll quickly go through some of them so that you sort of get a little bit of color on these client wins. So the first one that I would like to mention is basically a leading end-to-end product engineering. It's a global technology giant, and we are engaged with them on the product engineering for cloud-native and cross-device web applications. And we are basically doing this on enterprise-grade services like Microsoft. And on the back end is all architected on Azure. The second one, this is a very interesting one, is actually a legacy modernization. So the client is basically we are executing an autonomous modernization strategy to transform their monolithic ERP environment, which is built on a 4GL, into basically a hyperscalable .NET Core microservices-based application. So this is, what is interesting here is that this is basically not an upgrade in the same technology stack. We are basically moving it from one language to another. And this language is the old generation 4GL language. And of course, there is a heavy use of AI here. In fact, in here we have written our own agents. In fact, we have used AI for development on this one. So we have created our own agents that help us. It's about 4 million lines of code. So obviously we cannot do it manually. We are basically leveraging AI heavily and in fact the latest cloud models to help with this. Similarly, we are partnering with a world leader in heavy engineering, where we are helping them deploy AI-driven orchestration systems, which will help them, streamline their complex Industry 4.0, driven manufacturing workflows. Obviously, there is some amount of agentic intelligence being built into their manufacturing workflows and large-scale engineering projects. Similarly, we are driving a large-scale application modernization program, again, for a global leader in food services. And basically, we're trying to help them with the data engineering and the AI-led transformation side of things. Similar stuff we are doing with one of the largest providers of travel tech in India. Again, where they are trying to basically modernize their platform and basically inject AI orchestrated engineering into the whole thing. We're also seeing a lot of traction on the ServiceNow side, and we've been in the ServiceNow thing, and we had an acquisition there. So we basically are engaged with at least 2-3 clients now that we have won, where we are helping them. So one of them where we are helping them engineering high velocity AI orchestrated source-to-pay, workflows. This is again on the ServiceNow platform for a global healthcare provider. We are doing a similar thing for ITOMS, for another North American public sector power company. A similar thing for a financial services customer, which is a global industry leader. In kind of deployment of their Now Assist generative AI platform within the ServiceNow ecosystem. And in addition to that, we're also working. We just have started an engagement with one of the largest telecom providers in the U.S., where we are helping them architect, financial hyper precision by deploying a high fidelity AI ops intelligence layer, again within their ServiceNow kind of ecosystem. So these are kind of some of the customers that have been. I've not covered every one of them, but this will give you a general sense of the kind of wins and the kind of work that we are getting at this point. To go on the operational highlights, so I'll cover a few here. So we just basically enabled the algorithmic financial systems for a premier global bank by automating their mission-critical payment workflows across multiple countries, across markets. Similarly, we have basically we have also achieved the highest level of partnership. We have achieved the Microsoft Solution Partner designation across 3 areas: data and AI, digital and app innovation, and infrastructure Azure. This kind of places us amongst a very select group of companies within the Microsoft partner program, and our relationship with Microsoft is growing, and we continue to sort of strengthen it and work jointly with them. We also, for one of the premier and largest creative agencies, we basically worked with them to develop an AI orchestrated creative at scale ecosystem, as they call it. This basically helps them and this company operates around 140 companies. What this will help them is using AI, eliminate a lot of manual production bottlenecks that you face, and basically, and it will kind of move the creative workflows into an autonomous, brand-governed kind of hyper-personalized asset generation. So this will help them really scale their outreach to their customer in time to market. Similarly, we have developed for a global communication provider, agentic AI-driven verification fabric, and this has been developed on our own proprietary Kai platform, which kind of helps them to address board-level risks and also, things like SIM swap frauds and account takeovers and things like that. We have also been selected by a prominent UN agency to again design and deliver a generative AI integrated application supporting their global humanitarian program. So these are all some of the key operational projects or operational highlights that we achieved during this quarter. So that's all I have. Thank you, Niranjan. Thank you.
Thank you, Karanjit. Lot more detail is in our earnings presentation, and we welcome any questions that you might have in the quick Q&A. So please do join the queue. Mike, can we open it up for Q&A?
Sure. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Jay Prakash from Axler Research. Please go ahead.
Hi, Jay Prakash.
Hi. Congratulations on a stable set of performance last quarter. I wanted to understand that currently on the ongoing scenario around the world, if you look at all the shares of major IT companies, for example, ServiceNow company listed elsewhere, which is one company that you have recently acquired, also functions on the similar domain, that is down around 50% over last 1 year, and there are fears related to AI taking up a lot of services going forward. How do you see that? And related to data center capex, which is going to come up very soon, is there any opportunity for Kellton to probably add value or participate in that?
So thank you for the question, Jay Prakash. I'll answer the first question, second question rather, where you talked about the data center part of it. Yes, absolutely, right. We have deep expertise when it comes to data center, both from setting it up, our data centers, as well as, managing and maintaining that data centers. So we're actually partnered with a physical setup guy to cater towards one of the largest data centers in the world. We are still in discussion stage. We are not at a proposal stage yet. We are responding to RFPs and we're going and presenting. So we believe that, we are in the front foot when it comes to in the data center space, setting it up as well as maintaining and operating. So right now we are at the RFP stage, like I said. Now coming to your first question about the software companies taking a tank, including the services company, right, which they're calling the SaaS complex. We don't believe that, it's just a hype that is going around there. We don't believe that there's going to be a big impact on this. The impact is going to be more on per seat kind of revenue that, people operate. This is where the back office operations that happen for BPO related activities, that is where we believe that there's going to be an impact. While, people are talking about, cloud is going to replace all the SaaS platforms. Yeah, cloud might replace, for the small mom and pop kind of places where there is a requirement for a SaaS platform. But when it comes to enterprises, right, enterprises will not bet big homegrown or setting it up using the cloud co-work platform. Now, I want to ask Srini to answer this because he's front and center on these things. So I'll let Srini give a little bit more color on this SaaS complex and what the impact is for Kellton or Kellton-like companies. Srini, can you jump in and answer this question, please?
Sure, Niranjan. Thank you very much. To reiterate what Niranjan has been saying, the SaaS apocalypse that happened with the drop in share price values of all these SaaS platforms was, you can already see right now that things are improving and things are going back up. It was just a market reaction to something that Anthropic Claude released, right, recently. It released nothing but about 11 or 12 widgets or plugins, which are open source, that seem to do a lot of stuff. But in reality, they are nothing but some workflow automation that was built about by actually logical steps going through. So yes, what is being seen right now is that that the progress that is being made on the AI front is real. The pace at which it is improving and putting solutions out there or potential solutions is there, but there's nothing that is impacted right now other than the fact that customers are expecting more efficiencies in the workflow and in the workforce. So basically, what it says is that in future, until now, scale has been associated with headcount. That will change, right? It will be more about outcomes. And Kellton has always been on selling outcomes rather than selling billable hours and so on. So the impact is going to be minimal, yes, but the rate at which improvements will happen and what will come out in the market will increase. So that is the major difference that we see right now. And yes, ServiceNow has also, all of these SaaS platforms, whether it be ServiceNow, Snowflake, Microsoft, all of them have in some way, shape or form either internally started to build their agents and their AI components within their core. And in some cases, companies like ServiceNow, to reacting to this, have also preempted this by acquiring AI companies, right? So we see that the SaaS companies will improve, will do what is necessary to compete, and will adopt AI rather than fight it. So we don't see a huge impact either way. Yes, the way we operate will change, efficiencies will improve, but beyond that, I think this was just a market reaction.
Okay, just a follow-up to the previous question, that on a quarter-to-quarter basis, what type of productivity increase that you are seeing on a per employee basis? You mentioned about efficiency per employees will go up. So I believe that.
So let me answer that.
Let me complete my question.
Please go ahead.
Yeah. So, and are you also looking to make your team more leaner? I think a more lean team, given the productivity increase, will probably shareholder value.
Okay. So let me answer that. I guess we got two-part question. Let me answer the second part first. Are we expecting a leaner team? Absolutely, we are expecting a leaner team. But there's a second school of thought where they're talking about the volumes are going to increase because of the efficiency. So we could be, keeping the same team and increasing. I'm just picking discussion sake, right? We have 300 customers today. That could go to 400, 500 customers, or it could be some people are talking about an order of magnitude too, right? So we are just waiting and watching, because what we are predicting today with the rate of progress of AI, what we are going to be in a month from now is completely different. So at this point, our prediction is that volumes will increase while efficiencies are increasing. I will let Karanjit take that question on this, what are we seeing per customer, but, again, per employee, I'm sorry. But it all depends, right? We will answer that it depends, because units in our company have different kinds of efficiencies that have come in play. Karanjit, you want to take that? Sorry, you were asking something else, Jay?
No. Yeah, that's it. Yeah.
Okay, Karanjit, can you answer that, Karanjit?
Yes. Thank you, Niranjan. Yeah, so basically, we have various engagements types with customers. So wherever we have outcome-based contracts, various steps of the development cycle. Obviously, we have different users of, AI. So like automation test, today QA test cases are pretty much written using our own Kai tool. Similarly, all the documentation again gets generated by Kai tool. The stories and stuff like that all happens with the Kai tool. On the development side also, we basically use, AI is rolled out to all developers. We use Copilot, and then again within that we can use various models. But anyway, so the one where we can very clearly measure it is this outcome-based projects, where we are seeing, depending on the technology kind of project, is it a new one, is it an old one that you're upgrading to? On new projects, you're seeing between 20% to 30% efficiency gains. That's something that we can clearly see. Now, if you already have a huge code base, then obviously it depends on where you're working and things like that. So that's been our experience, about 20 to 30% general gains, and this is being rolled out internally to every project. I also made a mention in my first part of my comments where we said we are doing this translation or basically a legacy modernization where we are converting a 4GL language to, let's say, a modern Microsoft .NET architecture. Now, this is a big deal. It's 4 million lines of code. Obviously, it is sold assuming certain, already AI embedded into it. But I think in the manual world, the customer wouldn't even have. That is something which possibly the customer wouldn't have taken up that project. And even if we did, it would have been at least 3 to 4x of that value. So that's the kind of new work that sort of Niranjan alluded to, right? So that's kind of our lived experience with this.
Okay. Thank you, Jay. If there's any other questions, we would love to answer.
Thank you. That's it.
Thank you, Jay. Okay. Next question, please.
Thank you. We have the next question from the line of Rohit, an individual investor. Please go ahead.
Hi, Rohit.
Hello. Hey, hi, team. I'm Rohit from Pune, a retail investor. Congratulations on acquiring Kumori Technologies. And I have one question. How does Kumori Technologies acquisition contribute to Kellton's growth?
Sure. So Kellton bet on 3-4 partnerships, for the growth that we want to get to, right? One of them is ServiceNow, the other is Microsoft, and then we have a Snowflake, SAP we already have bet on. So now when it comes to Kumori Technologies, right? Kellton had a certain partnership level earlier before the acquisition of Kumori. Kumori gave us some more expertise and a much deeper expertise when it comes to delivering using services using ServiceNow. Now we are at a different level of partnership with ServiceNow, and that is going to give us better access to more customers. What Kumori has given us is a ready-made partnership with deeper, expertise, and now using Kellton's sales arm and the global reach, we will be able to get a lot more customers as well as interactions when we're going with ServiceNow. They are now saying, okay, guys, you have so many certifications and you are a certain level of partnership. Our relationship has changed, and we expect revenue growth to be there. Karanjit, you want to add anything on that? Karanjit.
Yeah, sure. So basically, as Niranjan said, right, so there is one is the strategic intent. So we've kind of zeroed on certain partnerships. And for us, we had to figure out how do we accelerate this. So what Kumori gives us, as Niranjan pointed out, is ServiceNow. They already have ServiceNow expertise. They're working with the ServiceNow ecosystem already. So we get all of that expertise, and we are combining that with our sales force. So it kind of helps now to do a global outreach of their capabilities, and there is a lot of traction that we've actually been seeing very specifically on ServiceNow and take that to market. So and also they've sort of, now we can actually sell to all our customers all over the world, right, from the US and also APAC region, Europe, everywhere. So that's kind of what it is. And of course, we get case studies and expertise and technical capabilities, right? That's a given. So it just helps us accelerate our journey.
Thank you, Rohit. Any other question, Rohit? Okay. So can you go to the next question?
Sure. Mike? We have the next question from the line of Pratik Dedia, an individual investor. Please go ahead.
Yeah.
Hi, Pratik.
Hi. Am I audible?
Yes, you are, Pratik. Go ahead.
Yeah. Okay. Thanks. So, yeah, I think coming back to the efficiency part, I understand that there have been efficiency gains with the AI part deployment. So how do you see that translating into higher margins going ahead? And what, if you could quantify, that would be helpful over 2 years or 3 years period?
Okay. So it's difficult, Pratik, at this point to quantify how it's going to reflect on the bottom line. The reason I say that is, since Karanjit has already alluded to, see, most of our business is T&M, time and material, right? If it is an outcome-based, like I was talking about, where we have the flexibility to use the tools, and we are not dependent on the customer driving the contracts. Some of our customers have told us in no uncertain terms that we cannot use AI. So we have to do the old school way of doing programming. As more and more customers are willing to accept the efficiency that AI is going to bring in and the confidentiality is protected, then we can start showing more productivity increases. But at the same time, right, the customer is already demanding, saying that, hey, you are using AI tools, pass on some of that margin to me. And we have, in most cases, have passed on that efficiency to the customer. Okay, so we cannot at this point say, okay, hey, because we are using AI, our margins are going to increase by X amount of points. This is something that we cannot do at this point. But we are seeing efficiencies, and like I said, the volume we can do is increasing with the same amount of stuff, and we are passing on some of the margin that we are gaining to the customer. So at this point, I cannot quantify it.
Yeah, Niranjan, if I can just add to that, absolutely. See, what is happening is the way it will play out is, yes, in fixed, in outcome-based projects, which is a certain percentage, we could keep the efficiency, but sooner or later the customers will demand that, they will ask for aggressive pricing, or like I mentioned, the last one, right? The customer wouldn't have even gone ahead with that program because the costs were prohibitive, but AI is allowing it to happen. So that will say increase in the business. One other thing that will happen even on the T&M side, and this will happen for a small time, is AI skills are basically premium. So this happens with every new wave we have seen, and typically lasts only about 1 year or so. So like back in the day, there were the blockchain and NFT technologies, so we could command slightly the rate, right? So we would have a $10 or a $15 upside on the rate, but then quickly, the Indian IT industry is smart. Everybody learns it, and sooner or later that advantage again comes back to wherever it was. So that will happen a little bit. So the ones that are up ahead in the AI, what it will impact is in your availability, it will help you in your competitive advantage, and for a certain time, maybe you can command slightly premium rates, but then, of course, everybody will chase those premium rates. So that's how I see it.
Okay. No, that's very fine. And in terms of the contracts that where client is asking you to not use AI, how are you seeing the pricing happen currently? And what percentage of your new contracts are being signed without AI?
Sorry, can I get the first part of your question again, please?
Let me answer that, Karandeep. I think I understood this. So the question that was asked was, how many of our customers are saying we cannot use AI? Okay, majority of our customers are telling us we cannot use AI. Pratik. The reason for that is they're still not ready for AI. Some of our customers, when you do a sales pitch, also, specifically this is happening in US. They're saying, hey, if you're going to talk about AI, please don't come to me. Okay, because they are not ready to adopt AI into their enterprises, right? And yes, they will change. The market will force them to change. The competitors will force them to change. This is some thing. Specifically, I think, with what has happened with the stock price crash everywhere, people are seeing, hey, AI is getting adopted. It's in many companies. So they will have to do it. Okay? So they don't have a choice. But at this point, majority of our customers, because like I said, most of our customers are T&M. So it is time and material. When it comes to time and material, they are dictating what is it that we can do or cannot do. In an outcome-based, we take on what they call the fixed price contracts. Then it's based on outcome, what we deliver, how much efficiency we deliver, how soon we deliver. So those are the things that are measured versus what we have used to get there. Right? In that scenario, we are getting these efficiencies by using our own internal Kai tool or, other cost products or open source AI tools that are available in the market.
Okay, got it. So can you elaborate on the pricing part for non-AI contracts? How are you seeing the trends there?
No, it's just been the same. There's no change on that, right? That is not changing on the non-AI contracts. It is per let's say, what we call the billet or per engineer, based on the seniority that the customer asks in the T&M contracts. They say, okay, I need a 10-year experience, Java full stack person, and we provide that person. Or they say, hey, for this project, give me what is your estimate, who are all the people that are going to be. It's a named resource there. And they will drive the outcomes, not we driving the outcomes. They being the customers driving the outcomes.
Got it. Okay. That's it from mine. Thank you.
Thank you, Pratik. Mike, any other questions?
Thank you. Not currently, sir. I'll just announce for questions once more. Participants who wish to ask a question may press star and 1 on your touchtone telephone. It appears we have no further questions. I would now like to hand the conference over to Mr. Niranjan for closing comments.
Okay. Thank you, everyone, for joining this earnings call. We're really excited to talk about our capabilities when it comes to AI. Looking forward to more interactions. If you come over to Hyderabad and or Gurgaon, please look us up. We would be happy to show and tell what all we have been doing. But please schedule that with the team ahead so that our availability and the time is locked. Again, thank you. Looking forward to talking to you soon.
Thank you. On behalf of Kellton Tech Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.